Hello everybody, my name is Anh Nguyen and today I will discuss with you my investment strategy. I believe that when we invested in the low PE stock portfolio, it will give us a higher return than the high PE stock portfolio. To be able to find out if my assumption was right, I went and did a little more research. So I collected data of 20 different companies and put them into two portfolio. 10 company is in low PE stock portfolio and 10 company is in high PE stock portfolio. And as we all know, the PE ratio is the current stock price of a company divided by its earning per share. A stock's PE tells us how much investors are willing to pay per dollar of earning. So my question is, the low PE stock outperform high PE stock? Well, according to yahoofinance.com, they say stock market profit are made in the buying, meaning that the price you pay for growth is as important, if not more important, than the price you sell for. Then I collected the historical data for my two portfolio of the last 2 years and calculate their risk and return. The return on low PE stock portfolio from the average return is total of 16%, higher than the total average return on high PE portfolio of 14%. From the same data, I plot the regression line to find out the slope of the line, where my x variable is the low PE stock and the y variable is my high PE stocks. The slope for the line is y equal negative 0.419x plus 0.0239, which indicate that every increase 1% of low PE stocks, there are 0.419 decrease in the high PE stocks. Then from the regression summary, I find out that R squared is equal to 0.28. The significant F is equal 0.11. The coefficient on low PE is 9.038. And my next question is it cheap or expensive to buy the low PE stocks? According to investor.com, the PE ratio is the indicator of the value of a stock than the market price alone. There are limits to this form of analysis, and we can't just compare the PEs of two different companies to determine that. So, what are the problems with the low PE? The PE ratio can help us determine whether the company is over or undervalued, but PE analysis is only valid in a certain circumstance and is had a pitfall. Some factors that can undermine the usefulness of the PE ratio, including accounting and inflation. In conclusion, the PE ratio is a much better indicator of a stock value than the market's price alone. And in general, it is difficult to say whether a particular PE is high or low without taking into account of growth rate in the industry. Change in accounting rules as well as difference EPS, which is earning per share calculation, can make analysis difficult. The PE ratio are generally lower during the time of high inflation. There are many explanation as to why a company has a low PE, but I don't base any bias or share decision on the multiple alone after my research. Thank you for listening.